The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time to take a look at Bitcoin. Trade blocks indexes are now the CoinDesk indexes. So the CoinDesk Bitcoin price XBX index is now trading at $54,000 and some change. Bitcoin is down about 1.3% over the past 24 hours, and the CoinDesk Ether price ETX index right now is at 27.73. ETH is doing pretty well, up about 3.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And joining us now to discuss the crypto markets is Forex.com Global Head of Market Research, Matt Weller, in Grand Rapids, Michigan. Welcome, Matt. Would love to hear your outlook on Bitcoin. Seems to be, as I mentioned earlier in the show, trading within a range.
Yeah, thanks, Christine. So what we're seeing so far today is a pretty broad-based gain across the crypto markets. When I checked this morning, 18 of the 20 tokens in the Coindesk 20 were trading higher. And I wanted to take a look today and highlight where we are in the broader cycle. Take that step back and see what's really likely to happen with Bitcoin and Ethereum moving forward.
All right, would love to hear your more broader outlook.
Sure. So one thing that we like to watch is essentially how long individuals have been holding on to their Bitcoins. The idea there is that people who have been holding for a long period of time are likely to continue holding. And if we look at the amount of Bitcoin held for at least 5 years, that is actually 22% of the total supply. And I like to just kind of take a step back and think about that. If you're someone who held Bitcoin for 5 years, 5 years ago, it was 2016. Bitcoin was trading at maybe $2,000, maybe less than that. As a matter of fact, you would have held through a 10,000% rise to up to 20,000, then saw a 90% drop back down to 3,000, and then, at least so far, held all the way up to about 60,000 or 65,000, where we saw a peak. So these Bitcoin, this about a quarter of the total supply, from my perspective, is essentially off the market. If you're not going to sell when it drops 90% and you're not going to sell when it rises 3,000%, it's essentially a sign that that has been taken off of the market, lowering the actual supply. And that can be a bullish sign as we see institutional demand and retail demand picking up.
But Matt, isn't some of that supply, at least a good portion of that 20% held, is the Satoshi Nakamoto's stash of Bitcoin? I mean, is that included in that calculation? I mean, we don't know if
it absolutely is
on this planet.
Sure. So, and whether Satoshi is alive, but that kind of underscores the point, right? In fact, Satoshi's coins have been held for more than 10 years. So we'll see if those ever do move or hit the market. But at this point, I think traders and investors could almost consider those as off the reservation, and the real circulating supply of Bitcoin might be closer to 15 million or at the moment, maybe 13 million. And the 15 million might be more of the actual cap.
Now, of course, the big story is Ether, right? That's the big story of the year. As I mentioned earlier, it's nearly quadrupled. What do you think is driving that demand right now? Why is that one particularly hot?
Because it's useful, right? It's Bitcoin, great store of value. It sort of knocked down the door, broke the dam, if you will, to open people's eyes to cryptocurrencies. But Ether and other smart contract platforms are enabling abilities that people never had before. If you're interacting with NFTs or DeFi, I did see just this morning that the amount of capital locked in DeFi protocols crossed $65 billion, and that's up thousands of percent from where we were at the beginning of the year. So I think the world is coming around to see how useful Ether and other smart contract platforms can be, and that's really what's been driving the price higher.
So would that mean that Ether and DeFi can move independently of Bitcoin? Like, even if Bitcoin were to crash, it wouldn't necessarily bring these other coins down with it?
They can certainly move independently to an extent. I think when it comes to Bitcoin and Ethereum, they're almost the reserve assets of DeFi. So in many cases, individuals are posting those assets, getting a bit of interest on them, but also borrowing against them stable coins, other cryptocurrencies that they then subsequently go out and use. So that creates a bit of leverage in the system. And if we do see Bitcoin or Ethereum drop sharply, I do think that we'll see those correlations start to approach one again, and we'll see much of the excitement we've seen in the DeFi space may slow down as traders have to unwind. Not just traders, but individuals just using any DeFi protocol will have to unwind some of that leverage. So I don't think we've completely decoupled yet, but certainly as we're in a bull market, and I think Lawrence mentioned at the top, we've seen Ethereum quadruple so far this year, whereas Bitcoin hasn't even doubled. So certainly within the bull market, those correlations can be lower.